Hello and welcome to Wealthy Trades Market Daily Forecast for March 24th, 2015. Let's recap yesterday's price action. All right, yesterday was kind of actually a really tight range day. It was one of those days that active traders and investors, they don't mind those days, but active traders don't like those kind of days at all, especially if you focus on the major indices, the S&P, the Dow, NASDAQ, whatever it might be. Not a great day yesterday for you. We did roll into the day, if you remember, in an uptrend. All right, the quality was good. We said, be a buyer of the best sector or the best stock. I'll go into kind of what our pick was for yesterday in a minute. So that was good, but it was a day that you could have got chopped up a little bit. I mean, again, the S&P, put in a pretty tight range. It ended up opening at 210. The SPY did anyway. It ended up opening up at 210.42. It went up, a little more than 50 cents. About 60 cents or so, 70 cents. Put in a high of 211.11, and then closed at 210. So real tight range, especially when you're dealing with a $200 stock. That the SPY is. And that's the thing I want to talk about too, real quick. We talk about this volatility. It's kind of, you listen to the news networks, and anytime the Dow moves 120 points or something like that up or down, we start talking about how that's a big up day or a big down day. Well, when you're dealing with the levels that we're at right now, that's not really all that big of a day on a percentage basis. Got to remember, the Dow's sitting at 18,000 right now, so a 120 point move is less than 1%. So that's not real big. When you're dealing with those kind of numbers, big days are going to be represented when you get up to the 250, 300, 350 day point days. That's a big day. Okay, so I think the paradigm is going to have to start shifting. I think it will. I mean, it just does over time. Because we're dealing with larger numbers, the paradigm is going to have to and will shift. But anyway, I did want to show you, go over the stats of the S&P today, and then we'll go into kind of what we did yesterday. Yesterday was a day that you could have been chopped up. The SPY, which represents the S&P 500, is in an uptrend. Okay, if you remember, we did go into a downtrend. Give me a second here. We did go into a downtrend back in March, early March. We went into a downtrend, kind of sold off from kind of the levels we're at right now, 210 down to, close to 204 or so, and then we shifted back into an uptrend. And you can see this represented by going from green bars, which represent closing above pivots, to purple bars, which means closing below pivots, and so you can see how we shifted into a downtrend. And then sold off, and then we shifted back into an uptrend. The thing I want to show you here, and this is a very powerful, extremely powerful strategy and technical pattern that I want you to watch for. Okay, so I want you to see, if you look here, when these bars turned purple. All right, so this bar turned purple, meaning that we closed below a pivot. Well, what happened was we then rallied back to what I call that shift area. It rallied back to the area where it actually broke that pivot low and shifted into a downtrend and then continued. The same thing happened here. We then go into an uptrend, and then we sell back off down here. So uptrend, we sell off, we go back down to that shift area. It shifted right around this 207 area. We then sell off down to that area, and bam, it creates kind of that big rally higher. We do have some selling pressure. Okay, so that's kind of I want you to pay attention to those shift areas. I can kind of zoom this out and see if I can show you some more examples of that. Let's see if I can find a couple more examples here. This is a good example here. In a downtrend, pop into an uptrend. Look right where it goes to. It goes back to that shift area and pop. Now the pops aren't always huge, but this is one of those type of strategies that works well. Here's another one. Go into a downtrend, rally back up to that shift area, and then move back down. Look at this one. Go into an uptrend, sell off back down to that shift area, pop higher. It's usually kind of those areas are typically kind of a springboard area, and I want you to pay attention to those going forward. They're the shift areas, much like right in here, uptrend, sold off, kind of a pop area. And here's why I wanted to bring that up, because we're sitting in the SPY right now. We're sitting at a very interesting level, and I actually believe that we're going to break out and probably break out pretty aggressively and make a true, nice big attempt. I think over the next, month, 2 or 3, I'm working on my second quarter projections, but I think we're going to put a nice pop in, and we're probably gonna go. I think we're gonna probably push a 2200, 2250 in the S&P, and then we'll figure out where we go from there. But we sold off here. We're kind of eating through some of this selling pressure right now. We're testing it, basing. Bam! I think we're gonna blow this top off. And if you look here, what happened before is we sold off. We then got tested this here. We tried to attempt to sell off again, and then we went higher. And I think that's what's going to happen here. We sold off. We're gonna chop around here, and I think that we could see a breakout of this level fairly quickly. I'm not saying it's going to happen today, but fairly quickly. So I want you to pay attention to that. That does fall in line with what we're doing today. We are in an uptrend today. I'll go into that in a minute. But here's if you're just looking to trade the markets, you do need to be a buyer. The reason you need to be a buyer is because for today we are in an uptrend. 79.3% of the stocks are in an uptrend, and the quality is above 50%. So that means that we need to be a buyer. I don't care if you don't like to trade in the healthcare sector or whatever. If you're trading today, I would be a buyer. So let's look at the overall S&P 500 ETF in the SPY, kind of get a gauge of how we could potentially play it. Obviously, we hit the trend side more often than we hit the counter trend side. The expected high today is 211.08. Okay, it hits that level 42.3% of the time. Okay, we can see that here. And let's look at the intraday, kind of look at this. This is what I was looking at before. Hits that level 42.3% of the time. And more often than not, when it hits that level, it ends up going higher, okay? And as of right now, the futures are pointing up a little bit. We're not gonna get a huge pop at the open, but this could be a decent rally day. We had a little bit of a reprieve yesterday, kind of a basing day. This could be a decent rally day. If you go long, which I would be comfortable going long, and that's what we're gonna do. Within my portfolio, I'm going long. So if you do go long, then I would use this 209 level as a stop, okay? And there's a couple reasons I'd use that as a stop. The main reason is because it's below yesterday's low, and I think we have, there's probably a lot of space between 209 and even further down. So you want to save yourself some money. Not only that, but it hits that level 38.5% of the time historically. But more often than not, when it hits that level, it ends up closing lower. And we can see that with the levels on levels in comparison to the HPP and the fact that it loses money at that level when you buy. So I think there's a couple ways. If you're going to trade within just the overall market or the SPY, you can go long at the open and hold it all day long and put a stop at 209. And the reason why I'd be comfortable holding it all day long is because when it does rally up and it starts to show some strength, and that strength would be indicated by hitting 211.08, then it has a tendency of closing above that. So that's a good thing. So again, go long at the open. Feel free, hold all day long, but put a stop at 209. That's not my favorite play. Let's go into my favorite play. And Wealthy Trades, we drill it in much deeper than that. Before I go into my favorite play for today, let's go into what we did yesterday. The best sector for yesterday was the XLU. Okay, the XLU was the sector you should have been focusing on. We were in an uptrend. The quality was good. And the XLU itself was fairly flat. Opened up at 44.95, closed at 45.01. So nothing real big. But if you remember, we decided not to focus on the XLU stock itself or the specific XLU sector stock, right? We decided to focus on the best stock within that sector, which we pared down and found that ES is the best stock or was the best stock in that sector based on the historical stats. And as you can see, ES had a pretty nice day, especially in the face of a day that was pretty much flat or down a little bit for the overall market. It opened at 51.11 and closed at 51.47, so it was up about 0.7%, and that's great in comparison to a market that basically was flat to down. So again, ES, great day for us. Long ES, you could have got in basically at 51.11 or even cheaper, all the way down to 51.03. It ended up rallying up about a 1% move there, give or take, a little less than 1%. Ended up closing up about 0.7%. So good day for that. That's the reason. That's one of the reasons why you need to make sure that you look at the dashboard every day, week, month, because the power that's in these stats, all right, we tell you where's the market moving, what's the quality of that move, where's the best sector to focus on. It's the drill down analysis. What's the best sector to focus on? Oh, and then what's the best stocks within that sector to focus on based on the stocks that have a tendency of hitting their upside or their trend levels most often. All right, so let's talk about today. All right, for today, what we're going to do is we're going to look to go long. We're going to be confident in taking long positions, and the reason why is we're in an uptrend. Not only are we up in an uptrend, but the quality of that uptrend is good enough for us to structure long positions without a hedge. Right? So I'm not going to do a pairs trade or anything like that. By the way, you can always, if you're a more conservative trader, you can always do a pairs trade. All right? I'll talk about that in a minute, but you can always do a pairs trade if you want to hedge your risk a little bit. I'm not going to because the quality is good. I put my faith and trust in the logical settings that Wealthy Trades has, and we do a lot of research, and we've come up with the most systematic, logical ways on defining how quality, how good a trend is. That's the reason why I'm going to go long within the best sector. But I'm not just going to blindly do that. I might just go long the XLV, but I'm going to also look at the best stocks within the sector. Okay, so I'm going to hit the plus symbol next to each stock. And I'm going to pull this over. The XLV, the healthcare sector, I was actually a little shocked that it was the best sector today. It got beat up a little bit yesterday. But the reason why it's the best stock is because a lot of the stocks, 96.4% of the stocks in the XLV, the healthcare sector, are still in an uptrend. And that's the main reason why it's the best sector, is because there's still a lot of them technically in an uptrend, even though it did get a little beat up yesterday. With that said, let's go into the sector, and let's do our drill down analysis and eliminate the ones that don't have a levels to win profit. All right, so I'm going to go through this. So UHS, as you can see, it loses money on the trend side, so let's just get rid of it. BDX loses money. Let's get rid of that one. ANTM loses money. Let's get rid of that one. All right, the rest make money. All right, it's the second analysis we want to do, or we want to see that when it hits the HPP, so the XLV, for example, when it hits the HPP, it hits the trend side. The 75.19 is the expected high today. It hits that 38.5% of the time. And when it hits it, it has a tendency of closing above it very, very often. All right, so more than 50% of the time. And then when it hits the counter trend side, so the counter trend level is 74.21. It hits that 34.6% of the time, and when it does, it has a tendency, less than half the percent of the time, it has a tendency of closing below that. So that's good. That's what I want to see. Here, more than 50, less than 50, that one's good. Here, more than 50, less than 50, good. Nope, the THC we can eliminate, because when it hits it at 53.8% of the time, which is high, but when it hits it, more than half the time it closes below it. So we're going to eliminate that one, THC. More than 50, less than 50, that one's good. More than 50, less than 50. Okay, so now we got it down to these 5. Well, we want to pare it down even further than that. Okay, so one way we can do it is we can just look at the stock that has the highest hit rate, which would be ACT. It's got the highest trend side hit rate of 53.8% of the time. So we could just say, okay, well, let's eliminate, because all these other stocks meet the requirements. Requirements being up market, quality good, best sector. It's got to have a profit on both sides. It's got to close above the trend side hit level more than 50% of the time. It's got to close above the counter trend level less than 50% of the time. So all of them meet the requirements. So the next easiest filter is just to say, okay, well, if all these meet the requirements, then we just pick the one with the highest hit rate, and that'd be ACT. I'm going to go a little deeper than that, and I believe it's actually going to be HCT, but we can use a little more logic, and we can kind of compare. If it all meets the requirements, well, then the other big indication of whether something is good or not is how often it hits the counter trend side and how often it closes below that. So I want to find one that has a combination of that doesn't hit that side all that often, and for sure doesn't close below that side that often. So let's look at XLV in comparison to ACT. So ACT hits the counter trend side, the downside, 32.7% of the time, and closes below that level, which is all negatives, closes below that level 5.8% of the time. All right. We automatically know that ACT is better than XLV because the XLV hits that counter trend level more often than ACT and closes below that. So I can eliminate XLV because I know ACT is better. Now let's compare ACT to A. So here's an interesting one. A hits the level 26.9% of the time, which is less than ACT. But ACT only closes below that level 5.8% of the time, whereas A closes below that level 9.6% of the time. And ACT hits the upside level more often than A. So this one is about a coin flip, but ACT is a little better. I'm gonna keep A for now though. This one's ZMH isn't as good because it closes below that level, you know, higher than ACT does, and then ESRX. Well, here's a good one. ESRX has a tendency of it hits the counter trend level less than both of these, and has a really low percentage of closing below. So ESRX is really good too. Now, I'm going to say ESRX isn't as good as ACT or A, and the reason why is because if I look at the percentage of times that it closes above, all right, the trend side, 28.8 compared to 34.6 on these two. So I'm going to say the best two for today, and I'm going to keep both of these because ACT is a really expensive stock. It's $317.58. There's some subscribers that may not want to trade within a stock that's $300 and some dollars. That's fine. In my opinion, this is the best play for today, going long ACT, holding it all day long, adding to the position if it goes up to 317.58 because it has a tendency of closing above that. If it sells off and goes down to 312.36, I'm going to add to the position there. I'm going to hold it all day and close it at the end of the day. So ACT, I think, is the best play. If you don't want to trade within that expensive a stock, I think A is almost just as good. Very, very, very close. Same game plan with A. You can go long at the open. If it hits 42.52, feel free to add to the position there. If it sells off and goes down to 41.88, feel free to add to the position there. Close the entire position at the end of the day. These are the two best plays for today, and A and ACT, and feel comfortable to go long because we are in an uptrend and the quality is good. As I said, you can always pair this with, to hedge your risk if you want, with a position short in the opposite in the best sector moving in the opposite direction, which would be the XLB. So just for today, and I'll start doing this, but I do want to show you if you do want to hedge your position, if you're really not that comfortable with just going long. Which, by the way, I'm just going to go long, but if you do want to pair this position, then pairing it with a short position in the material sector would be the way to go. So I'm going to do this real quick, and I'm going to just tell you if you do want to do a pairs position, which one would be the best to go into. So I'm going to do this fairly quick. Again, I'm using kind of the same pair down technique here to find the best stocks within the material sectors that would get me offer the best shorting opportunities. Okay, so we got more than 50, less than 50. Okay, so I'm going pretty quick here, but okay, so now I'm just going to look to see which one has the highest hit rate, and the one that I am going to, yep, okay. So if you do want to pair this with something, ATI is the way to go. ATI has the highest hit rate. It hits the trend side, which is the downside, 61.5% of the time. It closes below that level on a very high frequency when it does hit that level, and then it has a very low close rate on the counter trend side. So, and it doesn't hit that level all that often compared to some of these others. So, if you do want to pair a long position today, if you're not that comfortable with just going long today, that's fine. The stocks that you should go long would be either an A or ACT, and you could pair that with a short position in ATI. Um, that would be the way to go. Uh, for me personally, ACT is the best opportunity for today, and that is the stock that I'm going to focus on. So, thank you for your time. That is the daily market forecast for the weekly. We are in the XLV. MNK is the stock that we're focused on. A little too early. It's only Tuesday to kind of talk about that. We also are long the XLV on a monthly basis, which is doing great. Um, so we'll update that throughout the week. But everybody have a great day, and we will talk to you tomorrow.